All right, everyone, welcome back to Beyond the Headlines with myself, Michael Noss, and my co host here, Steve Gomez. We are going to, as always, break down whatever happened this week in the market, but as technical and statistical minded traders, we're going to, take all the fluff away of whatever the media says is going on, take a look at the charts and see what that actually tells us around these news. I think the main themes today, looking at the symbols that we have to look at, are AI, that continues to be a massive thing, and then the consumer. We talked a little bit last week about the consumer, how there was some signs that it was weakening. I think we saw a little bit more signs that that might be continuing this week. So, two big themes that really I think have been carrying the market for this entire year. So if either one of these start to fade, it could be early signs that we're in for a little bit of a pause or a pullback in this crazy rally. So Steve, how's your week been so far?
Yes, I'm excited because it's a 3-day weekend, um, and it's been good. Honestly, trading wise, I've got a trade. We'll tease you guys. We're going to save it for the end of the podcast, but been pretty light. Since the Jackson hole and the employment numbers, the fudge, and it's just I haven't found there's been a lot of choppiness, which we'll get into, but I haven't done a whole lot. So I'm just kind of grind it out and glad it's a 3-day weekend. Typically, it'll start to pick up. People come back to their desks. Today is dead. People are on the
Yes.
road, literally. So big holiday Monday, Tuesday, people come back. They're a little foggy eyed, but then end of the week and then the following week, it starts to really kick in. Seasonally, of course, September is a red month, and seasonally, October behind it is a volatile month. So we're heading into those areas, those waters.
Yeah, so I'm just drawing out what you were talking about here with this choppy action, right? This is the S&P 500, and we're probably 2 weeks, maybe three now, just hard stuck inside this range. Nothing really going on one way or the other. And this is the environment that, for a lot of traders out there, uh, especially unseasoned ones, like if I go back to me when I was trading, just getting started, these are the kind of environments that would kill me because I didn't have
Mm-hmm.
that, old man trader zen of just it's stuck in a range. Let's just not. And I was like, oh, what do I do next? What do I buy? What do I sell? But yeah, I've made a couple tweets and I'm still behind this that this is the kind of action I think you want to see after this insane move took place right now. Brian Shannon gets a lot of shout outs from his Shannonisms, we could call them, but he always talks about, right, price corrects through price or corrects through time. I mean, when you get overbought like this, you need to chill out for a period of time or right, you need to pull back. And it looks like, at least for now, we're chilling out right at these all-time highs. And yeah, so that's what, just to contextualize what you're talking about how choppy the overall market has been. It's
Well,
been
let's
been
let's
crazy.
visualize it, shall we? Take a look at your Slack and let's share that funny meme with people. This is why I'm not an options trader. I'm sure Sean and JC have had a fun week, but if you're able to pull that cartoon over that we were last ago when the Nvidia earnings came out,
Oh yes.
options sellers are it's a whole different ball game, and this is why I'm on the sidelines. I'm not an option seller or buyer. I just like to pick a direction, and so
Yeah.
when you have something where basically option sellers who are taking in the premium, they just make money over time as the bulls and the bears fight it out, and I don't want to be one of those chimps, so I've been sitting on the sidelines.
Well, and that we can go right to the first one here because, right, I think we'd be fired from the internet if we didn't talk about Nvidia earnings. Did you see any of there was a watch party at a bar on Wall Street? Did
You
you see
told
any of
me.
that video? Where yeah,
No, but you told me.
everyone's like sitting around and CNBC
Sausage
has
fest.
that little ticker that goes, it goes green when it's positive and goes red, and people are hoeing and humming. I'm like, geez, that to me feels like some sort of
You know
talk is
what?
coming in.
I was just going to say that exactly. That is like, man, they were making up songs in 1929. The sky is rosy, my stocks are up. And boy, when you got people gathering in that mass cheering on stupid cult stock, I mean, NVIDIA, no disrespect, great company, but it's become a cult stock.
Yeah. And all of that, and this was just why I brought it up when I did, is because that's who got killed. Or who got killed is the Bulls and the Bears in any sort of an options play. And what ended up happening was if you sold options on this one, you made money because I was talking to Sean a little bit, and I was talking to the guys over at All Star Charts, and they can look at how much the option market makers are pricing in these moves, and they were pricing in like a 15% swing one way or the other in Nvidia, and it ended up being off the open. It ended up being near flat. It was like 2 or 3%, which for a stock this volatile is near nothing. So if you were buying options expecting a pop, or you were buying options expecting a drop, all of those people lost money as the volatility just got sucked right out of the room, and nothing ended up happening. Now, one thing I wanted to look at just while we were talking about these chip names is Intel today. And I just kind of wanted a thought here from you, Steve, because Intel has been, you can look at the monthly chart here, has been an absolute dog when it came to every other semiconductor has just been rocketing. Just pick it, throw a dart at a board of semiconductors, and you probably made money, except for Intel. Fun fact, Intel, if you take from the moment it was added to the Dow and you take Intel on a total return basis, so you include dividends, you include any distributions, you're still losing money from the moment it was put into the Dow to now, which explains why, right? Neither me or Steve are buy and hold traders. We know that everything has its moment and then it's time to go. But we are seeing a little bit. There was some positive report about some plant they're opening, or something through here, and you're seeing it break into the gap here. Is this ever a trade that interests you, Steve? Buying something that's
No,
so repressed, or
downtrends. No, no. I mean, maybe for a day trade, it'll catch one day where it's going to just move higher. But other than that one day, I'm not really into swing trading big downtrends like that.
yeah,
It's kind of sad because at one time in the 80s, Intel was the 600-pound gorilla of technology and the microchip revolution and moving us
hmm
forward. But they've just become defunct, for lack of a better word.
yeah, they had the king, they had the kingdom. They were the kings of the castle, and then they kind of rested, and away they go. My big takeaway that I want for all of the viewers out there is I know there is an inclination for just us humans to buy low and sell high. Right? As we're taught about, we see things that, on sale at the grocery store and we're interested in buying them. You see things on sale on Amazon, you want to buy it. It's not the way you do it in the market. This is a monthly chart of Intel. And then we could just go through some other ones. We could go through Nvidia, we could go through SMCI, we could go through MU. Right, everything else is doing fantastically and in a nice uptrend, and that one is absolutely getting killed. So as much as it hurts, like, again, that human, that basic human, I'm gonna buy the thing that's down, I'm with you, Steve, that you're just better off finding something that's already established in a trend, trying to get a little bit out of that trend when you can on some sort of nice pullback or something like that, and then just moving on. Because yeah, this thing has just been, not only the fact that it's down. You know, say you bought back here in 2010 and you're pretty much flat on the position in Intel. The opportunity cost, I think, is something that's not
Yeah,
talked about enough. Is like,
right.
if you had 10 grand in this and nothing has happened to it over the
Excuse
last,
me.
what, 14 years at that point, just think of all the money you could have made doing anything else. Own some bonds, right? Just whatever it is, right? Just, I don't know.
Yeah, it's opportunity cost, it's mental cost, having to look at it and make decisions about it. And if you're a baseball team manager and you got a guy hitting, point oh, 0.57, you kick him off the team.
Mhm. Um, Last but not least, but it's just kind of the same chart, this MongoDB. I've noticed, so this is a database company. A lot of these database companies are starting to perk up a little bit on the AI thing, but it's just interesting that this is the same kind of chart as Intel, even though it's not a chip maker. To me, and I don't know, this is very, I don't have any data to back this up at all, but when they start rallying the junk around a
Mhm.
theme
Yeah.
play is when I start to get nervous, right? Nvidia going higher made perfect sense. They were every earnings call, they were saying, we're going to make way more money than we thought last year, and we're going to make way more money. And Microsoft rallying with them, that makes perfect sense. They're like, people are using Copilot, I think they call it, which is just ChatGPT in Windows. So all of those things were doing well. But then as soon as the junk that could never get moving starts to pop up, I start to wonder if this is near the end of the AI theme for at least a short bit. You take that and then you put the people in a bar celebrating Nvidia's earnings. I don't know. I wouldn't be going hog wild on any junky AI names right now, personally.
I agree. Matter of fact, um, I was trying to day trade some BBAI, but small cap AI name, and it was looking
Hmm.
nice on the daily. But I see the market's rolling over. We'll probably get to that. BBAI is failing, so it's just kind of funny. It's literally hitting market sell as you were just saying that. So I
Yeah,
guess
I
that's a
just
universal synchronicity. That's a good sign.
Well, and the I'm trying to think of examples in the past, but um, there's two that stand out. One is the initial crypto move in like 2018 when that initial crazy spike happened, and then you started to see Long Island blockchain. You started to see these really junky companies just say, "Hey, we're going to use the blockchain,"
Mhm.
and then that stock would like triple. And when the really junky names started to go, that was about it. And then the other was the meme stock rally, right? First you had GameStop and you had AMC, and then you started to see, I remember BlackBerry. They were starting to buy BlackBerry and Nokia and right down the chain of the really junky AI
You
type
know,
names. And it's or yeah, meme names.
uh, just it's we had a conversation before we went live. Trade Ideas is incorporating AI. Our stock should go up.
Yeah, there we go.
What I mean to say is a GPT language machine where you can interact and our users will be able to ask questions on a Sunday night and get a long reply with
Hmm.
images and configurations. And it's going to be cool. Stay tuned. It's coming in a couple weeks.
Yeah, I've been playing with it. It's really cool. It is like having a little personal
Powerful.
support bot just to help you build stuff. All right,
All right.
so
What's next?
that is all the AI talk. Again, I'm certainly, and I should say, when I think it's near a top, that is not me ever going to have the guts to short Nvidia
Mm.
or any like I'm. That's not what I'm saying. I'm just saying that if on the weekend when I run my scans and my algorithms try to figure out what to trade next week, if there's an AI play and then literally anything else, I'm going to be looking at that other thing just because again, I think getting on the bandwagon this late might be a little bit too late. So, all right, Steve. So you want to talk a little bit about the consumer and some things that you saw there when you were looking at the news.
Um, yeah. So yesterday, interestingly enough, you can pull up the charts as they come up, but two we would call it discretionary spending items for women. Lulu
Hmm.
and Ulta, where you can buy good expensive makeup. I have three women, a wife, and two daughters, and so I'm familiar with these names. And I just thought it was interesting looking now at Ulta. I've said in the past, keep an eye on stocks that gap down after earnings and sell and get bought right back.
Hmm.
These women are not having it. They need their makeup. Um, as far as Lulu went, how's the reaction to the headline? That's what we're talking about.
Yeah,
Headline bad, but reaction in Lulu is volatile. There's been a lot of up and down in that one, but for the most part, it hasn't really given way. Both of them were down big after hours, and the market has come in and bought them back.
but geez, look at that
An
monthly chart
army of
on
women.
Lulu.
Yeah, so maybe it's already been priced in. It's yeah, look at that. It's on the low end of its range. So maybe you're using people, maybe funds are saying I'm going to go for a contrarian blowout reversal here on earnings and pick up Lulu on sale. But who knows? I thought that was interesting. And then you add Dollar General into it, which I found the headline interesting. They were basically saying people can't afford to shop at Dollar General. Does that even make sense? Where are they shopping? I know they're going to Costco and Walmart. But there's two tiers, I think, in our retail society right now. The people that are still I got to tell you, I live fortunately in a nice area in San Diego, and the mall here in the zip code 92122 is it's so high end. I've never even seen some of these stores. And I walked around and I told my wife, I go, this place is just immaculate. It is just so high end. I can't believe what they've done with it. It's a Westfield mall. It's where I grew up as a kid watching movies. And fun fact, it's literally the mall in Fast Times at Ridgemont High, because that's
Oh,
based on high school in San Diego,
cool.
Claremont High, which was my rival mission base. So I know a lot of people that were there when Cameron Crowe wrote that story. It's a very fascinating, cool thing. But anyway, back to the mall. I'm walking around, I'm seeing these names and security guards in front of empty stores, these high end stores, and they're absolutely empty. But people are walking around, and I just think, wow, who are the people that are shopping at these stores, and who are the companies that are paying the rent on this unbelievable piece of property? So, interesting retail dichotomy out there. I don't know what to say. You know, you've got a tale of two consumers.
Yeah, and what's interesting is that this Dollar General selling off is kind of contradicting a little bit of what we talked about last week with Walmart doing well
Mhm.
as the
Yeah.
discount place. So yeah, it creates it's a weird thing, and you would think, and this is just from right my wife, who's basically saying that Lululemon's easily replaceable now. You can get the same kind of pants, Gymshark, because I guess there's all of these competitors out to it now. But yeah, that Lulu chart is looking awful. And then I even just quickly brought up Amazon, and that's not doing it's not doing horrible, but that's not doing fantastic either, considering, that to me is kind of the king retailer right now, because that's where everybody seems to get everything now. And that's not even doing well in relation to the rest. We had that gap down, that the yen, whatever happened, trade there, and the market screamed back to all-time highs, and then we haven't even really got to close the gap with any meaning here on Amazon. So we are seeing some weakness in the retail space. I haven't even looked at this, but the XRT, which is just our ETF on it, yeah, you can see well on the monthly chart, well off its highs still, and just really range bound and choppy, while we're seeing a lot of other sectors kind of break out and get near highs. So it's very interesting to see. Again, as someone not from America and not in America, I a lot of these stores, Dollar General, I'm sure we have dollar stores up here. I'm sure it's pretty much the same thing, but you would imagine that would be the one that would survive the longest if there was some sort of retail, dry up, right? Because that's where you go if the cheapest stuff's there. But the fact that that's not doing well is very interesting.
Well, it's a perfect segue into the next topic of credit cards.
Yes.
So, heard some horror stories and headlines that people are buying groceries with credit cards. And then I did see a chart that's out there. Just go ahead and look it up. Credit card debt is at a pretty much all time high for the American retail consumer right now. And so people are trying to make ends meet on credit, and stock market's at highs. So it's kind of again, a dichotomy going on between the stock prices and the 401k values versus what's happening out there in people's daily budgets and household management.
It's always interesting. I'd have to look at the studies because I've seen, I read a Substack and it was super interesting, and it had credit card levels, and then all of the things that you could denote credit card levels in to give a different picture basically painted. So I'll look at what this one is. Maybe we'll talk about that next week, because if I can find it, it was such a good article. 'Cause basically, he talked about, okay, if you do credit cards in absolute values, they look like this. But then if you do credit cards in relation to where you account for inflation, for example, well, then they're not that bad. And then if you do credit cards, so it was like this guy was able to paint, 17 different pictures based off of what it is, which actually leads me to a good book if people are looking for books to read on the long weekend. It's How to Lie with Statistics. It's an
Oh,
absolutely fascinating book. I
I
love it.
can't believe you said that. Were you showing that to Brad for some reason
Nope.
by chance? Because Brad showed that to me.
Oh yeah.
And the reason Brad showed that to me is because Brad and I used to work together for my dad. And my dad had always told us his favorite class in college was called How to Lie with Statistics.
Oh
So
really?
I'm extremely familiar with that book.
Yeah, it's a very, very good book, and it just talks about how I think the one that I take away the best, which I thought was hilarious, was the 4 or 5 dentists recommend this toothpaste. So then, what they end up doing, how they kind of fudge those numbers, is they ask the dentist, they say, okay, do you like Crest or do you like Crest? Yes or no. Do you like Oral B? Yes or no. Do you like blah blah blah? So what happens is they're not saying that they like this toothpaste over that toothpaste. That's why everyone can say 4 or 5 dentists recommend Crest, because it's basically saying 4 or 5 dentists just recommend toothpaste, and they just answered yes to every single toothpaste. So you look at the
Right.
stat, right, and they just it's so they're not lying, so they can't get sued, but it's not saying it. So again, a very very fascinating
Well, a
book.
lot of that is going on right now with the elections and the polls and things. So the models are questionable.
It really does. If you're a skeptical person at all, it's a really good book because it does a good job of teaching you every time you see a statistic of this thing is impossible. You go, okay, now how are they trying to, tweak and what
Got to
does this
read the
actually
small
mean? And yeah,
sample
it's
size.
really, really cool.
Okay, so um, you mentioned earlier you didn't have the gall to go short, but I
Hmm.
have the gall to try and short something. So let me go back to the screen share,
Yep.
and we can just see what I'm seeing. Hold on a second. There you go. Didn't want to jinx us earlier.
Now,
So
boom. All right, there we go.
we were also talking about cult stocks, and at one time Tesla was a cult stock, but it's really been struggling. I'll do a switcheroo here. We'll go to the weekly.
Hmm.
It's really been struggling as of late. With the Nasdaq and the markets at high, it's off its highs, significantly off its highs. Here's the weekly chart, kind of a bowed 200 week moving average, fake out down below. But I've got a lot of reasons. Sometimes I like to say, does the chart confirm the story? I'm probably early on this because it's not confirmed yet, but I'm taking a cue from what I'm seeing. I'm bearish Tesla. And you've heard us talk, you've heard me shit on the EV market. So there's probably some bias in this trade. Again, I live in San Diego and I've never seen so many Teslas in my life. Um, I'm expecting at some point maybe our California power grid goes down and I'm going to be pointing fingers at my neighbors with the 3 white Teslas backed into their driveway. Anyway, um, the chart is telling me it's safe to take a chance here, Steve. It's safe to pile on your nemesis, Tesla, and I'll show you why. Let me grab my illustrator. A couple things. Again, as we spoke of right off the bat, the relative strength is horrible compared to what the rest of the market's doing.
Yeah.
And I'm really watching this 200 day. 200 day is huge. Of course, Brian Shannon, nod to him. He's taught me the 50 day is the general bill of health. You're
Hmm.
above it, you're healthy. You're below it, you're not. So we've just been kind of winding back and forth. We did break the 200 day, but it was quickly bought back. And the buyback has now resulted in another week of trading back below the 50. So we're kind of pinched here for the most part. 20 is curling, the 10 is curling over. So I'm looking at this little area right here, and I'm going to see how this resolves. Obviously, if I'm wrong, I'll get out. I just feel like I saw another headline this morning with the video, some car changing lanes just getting smashed up by the Tesla on auto drive. And this is not going as well as I think they want it to. And we're just one baby stroller away from a headline where we might wake up and just see a gap down. I'm not predicting headlines, but I'm just saying I feel like when a stock is kind of backed in the corner like this, you're one bad headline away from a big gap down of a significant level. And I'm kind of playing for that. How am I doing it? I'm doing it in my 401k by way of TSLS.
Yes. Yep.
All of a sudden, our retirement accounts here, gosh darn it, in the country. I keep typing the wrong stock. There we go. Um, This is an inverse.
Hmm.
However, it's only one time. Since it's a one time only inverse, we're allowed in our retirement accounts in America to apparently buy this. Schwab let me do it. Can't buy a double, can't buy a triple. You really can't short sell stocks in your retirement account. But for some reason, they're letting me do it. So I'm having fun with that. Um, I'm just going to look for a break higher. Again, this is the inverse. There's really no point in looking at the inverse. That's just the vehicle in which I'm going to use. But
Yep.
I'm simply just looking for if I see a closing candle below Tesla, I'm going to jump on more. If it breaks back above this rising 10, which has been stymied twice, and closes above it and starts heading for the 50 again, I'm not sticking around. So I'm really just kind of focused on this level right here. And yes, I'm anticipating And I've got a bias. Of course, I admit that. I'm not going to deny that. But sometimes that's what the genesis of a trade becomes. And there you have it.
Well, and I think the thing to hammer over and over again with these news or ideas behind news-driven trades that you take, that's contrary to what you'll see on Twitter and from a lot of people, is you broke down the plan exactly, right? You said, hey, if this thing doesn't work, this is my line in the sand. This is my area to add. This is because then now you don't have to do anything, right? The emotion is now out of the trade. You say, I'm going to short more if it gets here, or buy the inverse, and then I'm going to stop out here, and it's all sorted, right?
Definitely not going to average down. That is not the plan. Averaging down means, these guys don't get it yet. The market's wrong and I'm right. That's the worst thing you can do.
Yeah. And again, it is I've seen it a million times. It is the difference between a winning trader and a losing trader, just how well they are. Here's my plan. I've laid it out. I have some sort of fundamental thesis, and then I've got, technical reasons and blah blah. And then if this does this, then I want to do that. And if it doesn't, then I don't. And at the end of the day, as long as you're planning on making way more than you're planning on losing when you're wrong, then it doesn't matter if you have a 40% chance that you're going to be right. Right? The
My backdrop here in the Nasdaq too is kind of confirming as well. 1, 2, 3, 4 days can't get back above the 10, and now this 50-day moving average again is coming into play. We could easily head into the weekend with a drippy candle, so I'll take that as well for a backdrop.
Well, and then take that and put up the Dow, the DAI, DIA.
Right.
My
Okay,
my
uh-huh.
my dyslexia really hurts with that one. Um, right? So you're seeing that kind of rotation, right? Where we have the Dow made new all-time closing high yesterday, and the Qs that Steve just showed didn't get anywhere near it. So, right, we are seeing this kind of rotation from what had worked in the past, and even the SPY looks better. And of
Double
course,
top.
for those who don't know, the Dow is going to be, or sorry, the Qs are going to be heavily weighted. It's pretty much entirely tech. The SPY is mostly tech, and then the Dow is not very much tech at all. So as you're going through these three different charts, in my opinion, this is the
Consumer.
easiest way to show, okay, people are moving from, tech, AI, all that kind of stuff, and then they're shifting over to, more,
Consumer staples, commodities,
yeah,
energy.
real things, right? Companies that, make things like I think actually, no, it's not Alta. There's the biggest component of the Dow is some sort of a healthcare provider, Altria or Alta or something like that. And then the second
Altria
biggest
sounds familiar.
biggest one I think is actually to go to our prior thing is AXP. I think is one of the biggest ones as well,
Yeah.
or American Express. So yeah, just again, make sure you're positioning yourself correctly, and then especially if you're a long only trader, because then if we get some sort of contrary move, you want to make sure that, in my opinion, that you're in the strongest sector and you're away from the weakest sector, which right now seems to be technology.
We'll finish with this. I really don't know what to make of the XLF, the financials. I'm not going to even try to guess the reason for the strength, undeniable, huge strength. It's basically ripping and pulling and dragging this market higher.
Hmm.
Look for any reversal in the XLF. It hasn't happened yet. This is the weekly, but you just can't stop the daily here. Look at that. Since that gap down, I've not seen a wall of buying like that in a long time.
Yeah. And just Burke B is another way to look at financials. With, I guess, congratulations if he ever sees this to,
Oh,
Warren Buffett actually joined the $1 trillion club yesterday. So if you take Burke B and you take Burke A and you sum them up, it's the seventh largest company in the world right now, and he just breached that $1 billion. So it shows that anybody with a consistent trading plan over time does fantastic.
well, he was selling B of A, and B of A is struggling here at the 50 again. I'll keep an eye on that. B of A can't get above that 50. Keep an eye on that.
Yeah, that's
Anyway,
definitely relatively weak to the XLF. That one for sure. Can't get going. Okay, guys. Well, I love doing these because it ends up just being two traders waffling on about whatever. It was a lot of fun. Again, it's a long weekend, so you're still going to see this on Sunday, but don't get up on Monday morning super early and look for trades. And take some time, get away from the screens, stretch your legs, touch some grass. If you want to still work on trading, the thing to do is to start, you know, doing your scanning and honing your skills and doing all that. And if you have trade ideas, that's the best partner for it. If not, come give us a shot. So, anything to leave the kids with, Steve?
No, have a nice weekend and then get ready probably for some volatility coming up.
Thankfully. Hopefully. I don't care which way we break, but I want the SPY out of this range. All right, guys. Talk to you
See
next
you.
week.